Hello folks, welcome to another daily Bitcoin market analysis by Inspocrypto. Today we will start with my initial comment. I know that some people are, they don't like that I'm still bearish on crypto, even it's not long term at all. But in my opinion, it's just realistic. And I'm not ignoring everything related to crypto. Not the good things, but also not the bad things. That's something that I'm missing a lot, not only in the Twitter community. However, we will talk a little bit about the current situation. I had today a very interesting meeting. And you remember a few weeks ago when I have started to talk about the current conditions of our economy. Maybe you remember I have mentioned about the role that rating agencies will have in all these. You remember I have told to you and mentioned that the three biggest rating agencies worldwide are coming from US, or they have also in UK, but mainly in the Anglo-American territory. And it's really interesting because today's meeting I had was more about risk or venture capital. And they were explaining that, you remember I have mentioned about shadow banks, private equity, hedge funds, they are underwater. But rating agencies, they didn't mention them. They didn't even, at least they didn't rate them, in my opinion, from a very realistic view. So usually they maintain just in the last few months their rating. Even many people related to banks and, to even the whole venture capital community, they know that many are underwater. Well, first of all, just because many of them are involved in real estate and they used, for example, real estate assets as collateral. Now the value is declining. So the whole real estate industry is, once again, and that's not new. That's absolutely not new. We have talked about the bubble of real estate. And the thing is, they are seeing that the next step is that rating agencies will start to rate them, to downrate them. And if you have an asset that is declining in value, and that's your collateral to get liquidity from banks, banks are not stupid. If they know that they give you 100 millions and the collateral was, was valued, for example, just to give an example, now it's fictional, $200 million, and now it's only valued 130 millions, of course, they see, whoa, something is happening here. I mean, they know that something is happening because at least in many major banks, I know they have a whole department with economists there who are making research and checking many different markets and forecasting. But the thing is, they are ignoring. Yet they ignored a lot of all these red flags. And now they see, still far, they see the big wave coming. And they have started to react. They have started to react means they are not providing liquidity at the same conditions like just before. Not because of the interest rate decisions of the Fed or central banks in general, just because they see that their collateral assets are in risk. Means, at the same time, they know that our governments are big in debt. So even, their buffer is shrinking. And also their options, not only from our governments, but also from the central banks. And now what they are expecting, it was really interesting to hear these views who are saying, they are extremely nervous at the moment, both sides. Those who provided liquidity in the past, and they still have some loans and credits running, old ones in old conditions, and those where they know that the credit contracts are coming to an end and they have to renew these credits because they know that the assets they own are declining in value. Means less liquidity. And we don't need to talk that the insolvencies of companies are rising, not only in Europe, also in the US. I mean, I was reading, for example, that in the US, if I'm right, they had almost 36,000 bankruptcies in March. That's almost 17%. Oh no, sorry, 42,000 insolvencies. That's 17% more just in 1 month. So if we had 36,000 March 2022, and that was, we remember COVID and all the effects that COVID had to the economy. Now in 2023, we have 42,000, so almost 17% more than last year. And the thing is that even audit companies, and usually, audit companies are a very nice indicator. If you see that they are hiring people, the demand by companies is big. When they are starting to cut their human resources, something big is happening. Ernst & Young is, for example, one of the biggest global guys or global companies who are providing company audits, and they are, for example, just in the US, going to cut their staff by 3,000 persons. That's really a lot. But that's not the only problem. The thing is that they are expecting a big tsunami happening soon, in the next few months, initiated by down ratings, by rating agencies. And that could trigger a financial collapse. Means when all these banks who are also in debt and has huge derivative books and assets running who are in red, and they can't just unload all of them without to make huge loss. At the same time, they are seeing that even the collateral of their clients are declining in value. You can imagine what would be the next step. Not only that banks between each other, they are not just making loans like we have seen in the last years, like, hey, I'm Deutsche Bank, I need 3 billion. Yeah, no problem. Now it's a little bit different. They are not just giving those loans, but they want certain informations about their collaterals, assets, and so on and so forth. Something, and that was very interesting, because for me, to be honest, I can't measure that. But it seems that some economists of major banks in Europe did their homework, and they said it looks even worse than 2008. And that was really what? So what they are expecting now and what banks are doing, they are trying to reduce the potential impact in case, and the crazy thing is they are waiting or expecting in the next few months to see one of the biggest banks internationally on global stage, that it will collapse. And they will not going to try to bail them out. Of course, the problem will be huge because trust is what moves markets. When the trust is shrinking, usually markets will start to decline in dynamic, pace, volatility. I mean, we can see that. We can see that even in crypto. I mean, today it takes weeks and sometimes even longer to see a solid price move. I'm not talking about those pump and dumps or, I'm really talking about directional trends. And that's something we have seen in the past. It can take, of course, months. I mean, if they are buying the dip and accumulating, usually when big guys are accumulating, it takes sometimes 2 months, 3 months, like we have seen in 2021, for example, when they almost crashed the market to buy at 30K and to push up then afterwards. It doesn't matter that FTX was manipulating and driving the whole operation, but it can take time. That's not the problem. But usually, in the meantime, you have a bigger market activity, bigger volume, more people coming in, and that's not happening. And that's the big problem. So, I have mentioned so many times, don't be focused on one asset. Related to crypto doesn't mean one token, doesn't mean you should own 100 different tokens. What I say is, don't be all in on crypto only. Don't be all in one equities only, or only in equities, not only in commodities. Try really to have a nice portfolio with different assets. I have warned you so many times. I have said, even I'm extremely bullish on long term on crypto. But it doesn't make sense to buy, to hold, because you will need, maybe you will need this money. And sometimes it's better to have an asset that could be useful, like commodities, for example. Or, check the history. You know that I'm not a big fan always to say history repeats itself. But when it comes to crisis or to really big economic crash, it does. Mainly it does. Make your homework. Don't be only focused on one asset. Me too. I cashed out. I'm not in crypto anymore, but I don't have any equities as well. I'm using different other assets. And that's for me pure risk management, what I'm doing at the moment. It's not about to say, hey, I'm going to invest to make billions with that. If everything starts with banks, not only banks, and I have mentioned the same money that is coming to crypto, it's just coming to crypto because banks are involved. If you don't have this anymore, this money is not going to come in anymore. That's a big problem. The market will change. The regulation will come because another part is, as mentioned just before, that our governments are deeply in debt. Means they just can do two things. They can print more money. Well, that's just to accelerate when you see the wall in front of you. Or you can raise the taxes. And usually to raise the taxes means, usually doesn't really mean that the wealthy people will pay 90% taxes and you and me, we will maintain the same tax rate we are paying right now. No. We will pay, usually we pay much more than the wealthy guys. Means, of course, for us that if we are trading, if we are making any kind of trades also related to equities, crypto, and so on and so forth, the government will stay there and say, now pay your taxes. And we will raise the taxes. They will raise the taxes. That's something where I don't have any doubt. However, I wasn't thinking that this will happen that soon, to be honest. I said, 2023 could be start everything. 2024, it's going to be ugly. 2025, many are saying we will see a big escalation related to a military conflict. I think it will start even before. And usually before this happens, it's just, usually we will have a crisis, a military, economic collapse, where government starts to use the opportunity to make a war economy. Now that's something that in Germany, for example, last year, the German army was demanding from the German government to say, because of the Ukraine conflict, to start to switch to a war economy. A war economy changed everything. And of course, even taxes wouldn't be the big problem for governments. Means if they push up more the taxes, they don't care, because it's a war economy. It's not, it's less customer spendings and so on and so forth. So it really looks, unfortunately, it really looks ugly. I mean, we are talking about that since months and even a little bit longer. And I will maintain my bullish sentiment for crypto in long term, because it's the technology. But a global regulation is also required for a long-term, a very bullish development for crypto. And it will happen. Until then, governments will try to close any kind of alternatives to their currency. Mainly for the US dollar, it's the heart of their power. We know that with Russia and China and the BRICS, Brazil now talking with Russia and China to create a BRICS currency backed by gold. I mean, that means, it's really clear for all of us. That means a war on currency stage, on currency level, that will bring us directly to a military conflict, because always happened. The question and the key is not only how to hold this wealth, how to convert this wealth in hard money. It doesn't matter what it means, if it means US dollar or gold, to buy something. To buy food, for example. To pay your bills, for example. Even if the banking system crashed, doesn't mean that the monetary system is not going to work anymore. Central banks can take over. CBDCs. Who is going to offer you the CBDCs? Do you think that's going to be your bank? or directly the central bank. And what will happen with the banks? Will they just disappear? Or will they just have a crash and some will survive, the big ones will survive, the small ones will disappear? Or will they transform to trading companies instead and to offer you other kind of services, but not as a liquidity provider anymore? A lot of questions we need to track and to try to answer. And we will do that. But, sometimes it's a little bit frustrating for me to read the comments and also to read some tweets on Twitter, because the most dangerous combination is arrogance and ignorance. And I see a lot of people out there with exactly this mix. And this mix is the worst case. Don't be one of them. Doesn't mean you should stop to do your life. I was even talking with my family, and one family member just said, I agree with you, but I can't change it. So I will live as usual. I will do my daily business. And when it happens, it happens. And then we will see. Yeah, you can do that. That's one option. The other option is to be very well prepared. I mean, if you know that something big is going to happen, but you are not preparing yourself, don't cry afterwards. That's the only thing. However, let us talk now a little bit about crypto. For me, it was really a crazy meeting today. I'm not, of course, mentioning everything because then I need to talk about the company, something I'm not going to do. But it was not shocking me because you know me. I'm talking about that since a while, and even about the rating agencies and this wave of down ratings that will happen in the next month. It's not going to shock me because we have talked about that. And that happened in 2008, by the way, as well. 2008, one thing that escalated the whole situation was the down rating by rating agencies like Moody's, for example. So it seems we are going to repeat, just the whole situation changed a lot. And this time, I don't think that we will find any fixed solution. So, yeah, be ready for what is going to happen. And just try to create a solid portfolio. Don't go all in with one asset. It never have worked, and it will not work in the future as well. Only if you know and have insider knowledge in advance, then contact me via DM. So let us go forward. So let us see what is happening here. The wealth ratio, 30 days moving average, is lifting up again. It went to 47%. Now it's sitting once again 50%. We can see why it went up also here. So the 30 days moving average now following it just. So we went up first to 72, then we declined to 43, then afterwards we went up to 59, and now we are at 51, indicating, of course, what we see here is what we have, this move here, and now it's pushing up more, hitting 51. usually just indicating they're sending more bitcoins to centralized exchanges, something it matches and it confirms what I have seen also related to net flow, something we will check together, because more and more bitcoins are arriving to centralized exchanges. We will see. I mean, it's not the first time, and I was predicting it. It will happen. We will go down, and nothing happened. Absolutely nothing. I mean, to say we went down while we are still above of 25K, that's just a little correction. It's not a dump that show us that we are going below of 20K once again. At the moment, everything still looks very controlled, to be honest. So we will see. However, also here, when we talk about control, you know what that means, right? Usually that means that the price will go up afterwards, because it's a solid signal from whales indicating they stop to send more bitcoins to centralized exchanges. Afterwards, usually it depends if we are going to see more of these 1 hour dumps. If that happens, that's a solid bullish signal. It doesn't mean we are going to make 50K or something, but usually it means we should see a sharp price move to the upside. I can imagine go up once again, hitting, for example, here 29.2 or something, and then we need to see. Also, the stablecoin reserves on centralized exchanges, after it declined a lot, it's lifting up. And we will check. I mean, Tether is printing. It's crazy. It's really crazy. I would like to know where they are getting this money from, what institutions, or what is their source. But well, it seems we will never find out. However, they are printing billions and billions and billions again. We can see that the waste ratio 30 hours moving average pushed up very hard once again to 88. 90 is really, 90 means we're close to have a big dump. They are not doing it anymore. 88, it's the maximum, and then you can see down. That's it. It's pure distribution. And distribution to collect more money and then push up with this money after the distribution once again, it seems. So yeah, that's from here. Let's go forward. So if we take a look here, for example, we can see that's almost the same pattern we have seen in our bottom, let us say bottom at 15, 16, 17K. It's happening once again, looks very similar. You can see that we had a lot of different big inflows, now declined. The biggest today was this morning with almost 960 bitcoins. Peanuts. If we take a look here, for example, almost no outflows. 310 was the biggest today, a few hours ago. If we take a look now to stablecoin net flows, we see, for example, related to spot, that I would say it's almost neutral. Maybe we received a little bit more just in the last few hours, but that's it. So future market went up and funding rate declined, up, declined, and now up. Also here indicating someone is right now demanding more longs. If we take a look to the open interest, and that's what happened here. Now declining, and if we take here leverage ratio, so the leverage ratio doing here, at least in the final phase, doing the opposite of the open interest. While open interest is declining, leverage ratio pushing up. Also something we know from the past, and we know the consequence, what happened afterwards. We went up like hell, you remember. Less open interest, more leverage ratio. Only works when the market is under control. So let us check here. If we take a look here, for example, we can see that once again, stablecoins are related to derivative exchanges, I would say, since this morning, almost a little bit more red than green, indicating they are cashing out. If we take a look here, for example, I would say it's almost neutral and not big at all. I mean, if we take a look here, net flow, that was the maximum today, it seems. Yeah, it was a net flow of 427 bitcoins. Green means more in than outflows to derivative exchanges, but absolutely nothing big at all. If we go forward, we can see that the funding rate is declining. That's the aggregated. So last update was from yesterday. Open interest declined a lot. Leverage ratio stabilized. Yesterday, for example, we had only 300 bitcoins and longs liquidated, while 180 in shorts. Sunday, we had 143 liquidated in longs and 340 bitcoins and shorts liquidated. And Saturday was crazy. I mean, 1,800 bitcoins in longs liquidated, 300 in shorts, and we had 3 days in a row just were Thursday, Friday, Saturday. Thursday with 1,560 bitcoins and longs liquidated. The day after, 1,600 bitcoins and longs liquidated. And then finally, Saturday, that was 1,800 bitcoins. And that's it. Since then, the market has recovered a little bit. Of course, we are right now in a support area, so we can maintain here for a while before we go down or up. We will see. If we go forward, we see here, 1.8 billion in longs and 1 billion in shorts. But the most interesting part in that case here is not what Binance is doing, it's what Bitfinex is doing. We had 17 millions last week. Now we have almost 24 millions. And we had 2.7 billions in longs, and now we have 2.5 billions in shorts. I would say maybe they know something we don't. I don't know. However, if we go forward and we check now what the Kingfisher is indicating here related to the liquidations. Oh no, please, not again. I have enough credits, so please, 20 credits, that should be enough. Thank you very much. So if we take a look very close to the current price, we have more shorts than longs. The next longs liquidation cluster would be at 27. The biggest here with 150 millions almost is short positions on 40,000. The biggest longs, low leverage at 18,800. If you take a look to the high leverage, should be on the short side. Yeah, completely. So usually indicating at least we should go up to 27,750. That would be my expectation to liquidate all of them. 25 million is not that bad. We are talking here about almost how much? Well, it's almost 20 millions. It's not bad at all. So also here we are done. Let us go forward. So if we take a look, maybe you see something. Are you noticing something? I mean, Binance with Tether up and down. Aggregated up and down. BUSD up. USD up. Bitcoin collateral futures up and down. Stablecoin futures up and down. What is happening to these two here? US dollars and BUSD. I mean, BUSD? Really? We are talking about 40 millions in CBDC, in CBD. 40 millions means they purchased more Bitcoins than sold. 40 millions. If we take a look here, almost 50 millions with USD, US dollars. What the hell is going up here? While Tether, as you see, it declined almost 40 millions here on Binance. And if we take here 200, almost 70 millions, the aggregated. So that's crazy. Is Binance at the moment just maintaining the price? And Coinbase? Because of USD? I don't know. Who is trading BUSD? I thought after the problem we received with BUSD would be almost dead, but it seems it's really still very alive. BUSD aggregated. Aggregated means all pairs are selected, USD, USDT, and BUSD. So you can see that BUSD on Binance is doing something different to the aggregated. They started to distribute here while BUSD is pushing more up. Bitfinex didn't change. Yeah, they stabilized here and the price a little bit also following. If we take here, Bitget declining more, so we can see they decline from here to here, almost 800 Bitcoins down. Coinbase, of course, pushing more up. We are talking about 2,500 Bitcoins purchased more than sold. Skew52 said that Coinbase whales selling while retail buying. Oh, interesting. The trap is working. So if we take a look here, for example, we can see also on Bitstamp, they started to purchase more. Kraken, opposite, declining. And Gemini, doing exactly the same. Really interesting what they are doing. If we take a look now here, and that's the most important and interesting part in my opinion, we can see that we have a big yellow bar here. That's only Tether, and we can see exchange inflows 900 millions, almost 1 billion. And we remember that was actually, we received them yesterday at 10 a.m. and it was yesterday or the day before they printed 1 billion. So we can see also here that the yellow bars are bigger than the blue bars, also indicating that centralized exchanges are receiving more stablecoins than outflows. Usually also something that could be bullish. Of course, centralized exchanges, some of them are of course also providing futures, so we don't really know if they are doing it because they are sending those stablecoins for futures or not. Retail, buying, even here, buying, these guys at the moment, increase their balances. The market maker declined, and we know vice versa. When these guys decline, this guy is rising up, and so on and so forth. So still working at the same. If we take a look here, okay, stabilized, declining more. So retail, at least those with tiny wallets, declining a lot. Those here lifting up, here lifting up, here lifting up, also here lifting up. Here they declined a lot, now lifting up. Market maker, not doing anything. This guy's here, not doing anything. And this guy's, of course, as well not. That was, by the way, the wallet counts, you know. So just to see if we have a big gap or something. Also interesting, we received here, that was last Friday, 5,800 Bitcoins from market maker. And if we go to the miners, we can see that those 6,700 Bitcoins, for example, they shifted from miners reserves to centralized exchanges. So they are, it seems right now, selling. They sold here, they sold here, and now they are selling here. So also indicating, I mean, we remember here that was also big, almost 13,000 bitcoins. The question is always if these guys are, for example, right now, those miners selling or sending to derivative exchanges to make some bets with their bitcoins. It's also possible. Market activity declining more and more, even on futures, just declining. That's the trend. You can say whatever you want, but the market is bleeding, is bleeding. The chart looks different, of course, but that is what it is. Spot volume declining again, future volume lifting up, and funds, stabilizing, not doing anything at the moment. So let us go forward. So on Coinbase right now waiting here at 26.6, but you can see between 25 and 26.6 a lot of liquidity waiting, otherwise 20k, and they are reinforcing 35 and here 33. So I would be careful. I can imagine to go down 25k and then push up, or from here directly up and 25 afterwards. We will see. Bitstamp. On Bitstamp, also here 30,500, bringing some sell orders at 20, 32, 34. Also here a lot of liquidity between 26 and 25, like Coinbase, for example. Binance BTC USDT doing exactly the same. They removed all the sell orders above. Now more concentrated between 26.6 and 25. So it looks very solid. They removed these walls here at 23, for example, and reinforced 20k like Coinbase as well. But that's it. So also here expecting we will go more up. BTC BUSD, for example, you can see that here they are doing exactly the same. Between 26 and 25, a lot of liquidity waiting. Bitfinex BTC USD also reinforcing between 31 and 32,000. Of course, could be spoofing. Nobody can don't know that, but also missing here some liquidity in the area of 25. OKEX spot with USDT, nothing. Kraken, wow, Kraken doing exactly the same at 25, a little bit lower, and 26, between 25 26. Of course, at 29 waiting, and also here 32k would be the max at the moment. On BitMEX, nothing. Now derivatives. We start with Bybit, that's US dollar, BTC USD, nothing. Now with Tether, Bybit and Tether, BTC USDT, nothing. Now Binance, BTC USDT. You can see that they triggered some big longs and some shorts right now waiting at 27, 28.5, 28.7, and so on and so forth, but also here indicating like they did just before. Usually it works. Here, for example, very nice controlled, but also looking like they want to push up from here to the upside. However, could be also spoofing. They removed here some liquidity, but everything between 25 26 still looking very solid. BTC BUSD, they removed the wall at 25.5. Derivatives with Bitfinex. On Bitfinex, they only shorts at 28.2 and so on and so forth. Removed, for example, at 29.6. The the short here. Now Kraken futures, nothing. OKEX futures, nothing. And Deribit. And on Deribit, well, just between 24 and 26 almost. We have here a lot of not huge. 1.2 millions is here the biggest at 30k, but you can see a lot of sell orders waiting there, but even bigger liquidity here waiting between 24 and 26,000 right now. Also here indicating they want to maintain the price at the moment above of 27k. So if we go down to 25k, that would be a nice trap for bulls. Let them think we will go up from here and then we go even more down, or push up to 29.2 and then go down. We will see. That's it from here as well.